Folks, welcome to the Contrarian Trader. This is Bob Desmond, and we're going to discuss today, yes, some best stock picks, as I always like to do, but we're also going to discuss a question that was posed to me by a prospective member a day or so ago, and the question was, what is technical analysis? And it's funny, I don't spend much time discussing what technical analysis is, and I'll read to you a description from stockcharts.com, and it's fairly simple. It's simply this. It's the forecasting of future financial price movements based upon past movements. And I'm going to run through some examples on the charts I'm going to go over right now. So what do you need to become a good technical analyst? What you need are, let's say, three things. One is a fairly decent charting program like stockcharts.com. You need a crayon. I'll show you what I mean by that in a moment. And honestly, you need a lot of time and experience, because there will come a point where you don't need that crayon any longer, or you'll need that crayon a lot less than how much you'll need it at the beginning of your learning experience. So let's kick it off. We'll just start with the Healthcare Select Spiders. That's what we're looking at right now. The XLV is the symbol. And by looking at this chart, I could see that we broke out on Friday. And you may be saying, well, all I see are a bunch of candlesticks, a lot of noise, a very noisy chart, and this is where the crayon comes in. What was a rather noisy chart, and if that's what you're thinking, you're absolutely right. Now let's take a look at a different view using our crayon. Okay, so now here you have it, the very same chart, but now we've drawn our lines to identify downtrends and uptrends. And you could see that on Friday, we broke out of a downtrend that began on March the 20th, of 2015. This sector can be bought, and we may just buy it in the coming days. Now, technical analysis is not just the usage of charts to identify breakouts. That's way too simplistic. You need to make more observations of how the stock is behaving by using price and volume action, and we'll take a look at the volume action right now, and you can see that while we had some strong down bars, meaning that there was distribution on the part of institutions, you could see that the up volume bars have been very, very weak. So Friday just happened to be the weakest up day in quite some time. And that is not a good sign when you're looking at a stock, or in this case an ETF, that is breaking out. So while we have a clean breakout, we also need to observe the health of that breakout by looking at the candlestick. So I'm a bit suspect of this breakout. Would I buy it now? No, I adopt what I call a 3-day rule. And the stock must, or in this case an ETF, must trade above this resistance level for at least 3 consecutive days before we get involved. In all probability, it will manage to move higher. The relative strength indicator has broken out as well, a very, very bullish event. You always want to see both of these, the indicator and the price movement, confirm each other. Let's take a look at a couple of other charts. This next chart is the GDX, which is the Market Vectors Gold Miners. So what is the GDX? It's another noisy daily chart, which at first glance looks rather directionless. It looks very, very noisy. It appears to be in a downtrend. So what we want to do, once again, is we need to get our crayon out. Very, very simple. Remember who uses crayons? Children. We can all use crayons. So we want to identify trends on this chart. For example, without even pulling out the crayon, let's first take a look at the price action here. What you saw is a double bottom setup and a higher low, which led to a rally on the GDX, which eventually failed at the 200 period moving average, where it rolled over. Now let's take a look at the annotated version with our crayon work already done. Okay, so now let's take a look at the annotated view, a weekly chart of the GDX. A weekly chart provides you a much cleaner picture of how a stock or ETF is behaving, because it eliminates a lot of the noise that a daily chart will bring you. So you can see that we have been in a long-term downtrend over the past 4 years now. And despite the fact that I am a contrarian, I do not ignore the trend. The trend is your friend. So it's wise to pay some respect to the trend. Now, is there opportunity when you see trend reversals? Absolutely, and that's what we're poised to see right now. I'm going to point it out on the GDX. Now, note, long-term downtrend until we saw bottoming action in December of 2014, a double bottom setup. I pointed it out on the daily chart just a moment ago, and you could see that in January of 15, we broke out. We rallied up to this upper band of resistance. Now we are in a new trading range. We broke out of this long-term downtrend. Now what we're struggling to do is we're struggling to break out to make higher highs now. And I think that we're probably going to do it in the coming weeks. Now, just because the stock is broken out of this downtrend, does that mean the selling is over? No, not by any stretch of the imagination. Does it mean that you should go buying this stock on Monday morning, or ETF, I should say? No, not by any stretch of the imagination. It's because what is technical analysis? I'll repeat it again. It's the forecasting of future financial movements based upon past movements. So using that descriptor, every time we've hit this upper band of the declining downtrend channel, which has been once, twice, we've sold off. So would we go buying this ETF on Monday morning? No, not if the past is any predictor of future price performance. In all probability, we're going to see a pullback, and that will be your opportunity to get in, perhaps at the lower band of support here. I would not go buying this ETF unless we got a breakout above what is currently resistance. And a breakout would be if we closed above this upper band of resistance. I hope that makes sense. What we're also looking for here is a breakout on RSI. RSI is a forward-looking indicator. It's one of my favorite tools to use to confirm price movements. There will be times where you see the RSI break out before price does. Another forward-looking indicator is the slow stochastic, which is now making higher lows. This is a forward-looking tool, and in all probability, we will probably see a higher price move on the GDX in the coming weeks. Watch it. And all of these names I'm going to be going over, we may be looking to add to our portfolio in the coming weeks or days. Now, this is another very, very popular ETF. It's called the Triple Qs, the ProShares QQQ Trust. I went over this chart on Wednesday's member stock pick request. You could see it on the blog. If you're watching this on the blog, you could also see it on StockTwits, Twitter, YouTube, wherever you're watching this, you'll be able to find it. And when I did the video, I was somewhat bearish on the chart of the Qs due to the fact that the oscillators were very, very weak, or indicators were very, very weak. The slow Stokes are making lower highs, which is not a good sign, as is the MACD. But the MACD is not a forward-looking indicator, as is the slow stochastic and as is the RSI. And I also mentioned that while I may be somewhat cautious and bearish on the triple Qs, beware of the candlesticks. They were flashing bottoming tails. What is a bottoming tail? A bottoming tail is if you're reading Technical Analysis for Dummies or another book, a bottoming tail is usually my term. It's a sign that we have buyers below. It's sometimes called wicks or shadows when you're using candlestick charting. And it's a sign that there are buyers below willing to pay X number of dollars off of support to send the stock or ETF higher. And on Friday, we rallied, we flashed a bullish key reversal, and we are now leaning into this dotted line, which is resistance, and we could quite very well break out next week. So while no breakout yet, the price action is looking good. No breakout yet on RSI. The ultimate oscillator, when I was doing the video, I pointed out had broken out, which is very, very bullish. So a mixed bag here. There's no guarantee that the triple Qs are going to break out, but from my recording of the analysis of the triple Qs on Wednesday to Friday's close, the chart has strengthened quite a bit and is looking fairly strong. But I'm still concerned about the choppy action on the Stoch RSI and the lower highs on the slow stochastic. So I'm cautious on the triple Qs. I wouldn't buy them unless we got a breakout, which would confirm that the price move is for real. So for right now, the triple Qs are a watch. And you may be asking, Bob, you mentioned volume before. Where does volume come into play with the weekly chart? Well, it wasn't good. Let's take a look. Volume was very, very low. This red line here is the moving average, and volume was very, very weak. And we can even take a look at Friday's price action to break that out. We closed higher on the day, off the lows of the day. Volume was well below average. So would I go buying the triple Qs on Monday morning based upon the weekly chart and the daily price action? The answer is no. We need to see a breakout above this resistance level. Members, I'll be going over all these charts again on the Focus Stock Analysis video. You would need to be a member to view that video, which is going to be coming out on Sunday. Another stock that I mentioned on Wednesday on the Member Stock Pick Request video was LinkedIn. And I pointed out during that video that I did not believe that this support level was going to hold. And since that point in time, it had broken down below key support. On Friday, it did close higher on the day. I do like LinkedIn. It is oversold. However, it is at a resistance level. It is not behaving the way I would like it to. I'm looking for a lower price point, and I think that we'll probably see that in the coming days. And if it doesn't reach that price point, I am going to avoid the stock because the risk to reward is not in our favor. Technical analysis is about being able to identify when the best risk to reward entry point is, and we don't have it just yet. So while, yes, on Friday we had a up day, a bullish key reversal. This pattern is called a bullish key reversal. We did not close above resistance, and in fact, the chart indicates to me that in all probability, we are going to head lower in the coming days. Could they gap it higher on Monday? Absolutely. Technical analysis is not a crystal ball of what is exactly going to happen. It's just an indicator of what might happen. So by no stretch of the imagination is technical analysis a crystal ball. What you should also be worried about when you're using technical analysis are the moving averages. In this case here, we have the 50-day moving average, which is rapidly declining. That is not a healthy sign. Ideally, when a stock is moving higher, you have the moving averages that are moving higher as well. In this case, you're probably going to see the 50-day moving average cross below the 200-day moving average. That is a very, very bearish event. Google in death cross, and probably the definition you'll find is the 50-day moving average is crossed below the 200-day moving average. Volume on Friday was very, very weak. So that does not bode well for LinkedIn moving into the coming week. Is it a guarantee that it's going to head lower? No, not by any stretch of the imagination. It's just that the probability is that just by virtue of the fact that it closed below support, it's probably coming down to a lower price point last seen back in October of 2014. And then we'll look to get involved at that point in time. And our trading desk does send out alerts to our members. Tom is good enough to get those out. Next stock up that we're watching is AEYE, which is Accuracy Inc. daily chart. Let's read that definition of what technical analysis is once again. It is the forecasting of future financial price movements based upon past movements. Now, in this case here, Accuracy Inc., the charts were telling you back here that you should look to get out of the stock. The market sent you signals, and that's the beauty of using stock charts and technical analysis. Whenever you see these wicks or candlesticks, or as I like to call them, topping tails, it's a sign that there are sellers above. And then if you were still bullish on the stock and you didn't want to get out right away, you need to identify where support was, get your crayon out and draw your support level, and if it breaks down below that support level, get out. You should have had a stop loss order in below that stop point. Also, the stock was in an uptrend. It broke that uptrend on April the 14th when it broke support here. So the market sent us signals that you had to get out. How else did you know? If you didn't get out here on April the 14th, when else could you have gotten out? Well, there's something called the head and shoulders setup. Left shoulder, head, right shoulder. Here's your neckline. You get your crayon out. You draw your neckline or support level. Once it broke down below that neckline, you had to get out. When did it break that neckline? It did so on April the 29th. If you had gotten out at the end of trade on April the 29th, you would have avoided this breakdown, huge breakdown on April the 30th, where we saw a high on the day of $8.98. We've now seen a low of $5.90, a big drop. Now we're looking to buy AEYE as a contrarian trade. And this is how we make our bread and butter. This is my specialty, is identifying charts that are at unsustainably low, oversold or overbought levels and buying them when nobody else wants them or shorting them when they're overly loved. Members will be going over this chart in great detail on Sunday's Focus Stock Analysis. Okay, next stock up is EZCH Semiconductor, EZCH, if you want to pull it up on any charting software. Now, this is the value of using weekly charts. Again, it eliminates the noise of the daily charts, and it allows you to identify historic support and resistance levels. You draw your upper band of the declining downtrend line, and you draw the lower band of the declining downtrend line, and you watch and you wait. There's no need to go sitting in front of your computer all day long watching the chart. That's the beauty of contrarian trading. No intraday trading. Now, you could see that every time we hit the upper band of the declining downtrend channel, we sold off and usually came down to this lower band. So we knew not to buy up here because we were at resistance, and this breakout, which was successful, failed. It rolled back over. This is what I term a breakout point failure, where we broke out of a downtrend channel, which could have been bought. However, it failed and rolled back over, and there's a rule when it comes down to breakout point failures, and that rule is that in all probability, we are going to come back down to the lower band of support, which is a huge drop. So the minute that we broke back down and closed within this trading channel again, you needed to get out. Sell your shares, move to the sideline, because in all probability it would move down to this support level, and it did. And there's a good likelihood that it will break this support level and head lower, because that's what breakout point failures do quite often. Now, you can see how history may not necessarily repeat itself, but it certainly does rhyme, where it pulled back to this lower band of support and bounced. You'll note the bottoming tail seen last week. Again, you saw it back here where we hit the upper band, pulled back, respected the lower band. This is the beauty of technical analysis. So if you wanted to buy EZCH, all you needed to do was set your computer to buy shares of EZCH at this support level at 1433, and you could have made a profit last week. Let's go to the daily chart. Again, no need to be sitting in front of your computer. Set your computer up to buy shares. In this case, you could have used 1430 to 1433 and sold at 1550 because it acted as resistance here. Now, looking at this daily chart, I could tell you that in all probability, EZCH is probably going to make lower lows. This is a dead cat bounce. Now, is it a guarantee that it's going to make lower lows? No. If the stock has a big short interest, if it is undervalued, perhaps it could move higher. But the chart is telling me that there are sellers up here at 1550. So the risk to reward is not on our side right now, so we want to avoid the shares and move to the sideline. So I'm going to be going over this chart in greater detail with members on Focus Stock Analysis. Members, stay tuned, and we'll identify a good entry point. So now I'm going to wrap up what technical analysis is by using FLDM, which is also on our watch list. We want to point out the value of using charts. We want to point out the value of using a simple illustration tool on your charting software, or I like to call it a crayon, to get out, do some analysis, and do your analysis after the market is closed. Don't do it during normal business hours. The reason is this: price fluctuations. You want to use the closing prices. So let's take a look at FLDM and identify where the charts told you to get out. And many people may want to think that the markets are rigged. High-frequency traders have destroyed this business. They have not. If you're a day trader, perhaps high-frequency traders have destroyed your business. I have a lot of respect for day traders, but I am not strong in the day trading arena. I'm more of an analytical guy. I like to identify larger price movements and take advantage of those moves. Day trading it's a skill set that I just don't have those skill sets. So no offense to day traders. There are some very, very good ones out there. All right, so let's take a look now at the annotated chart. I took my crayon out, and you may be looking at the chart saying, wow, I don't see where the market sent you signals to get out. And believe it or not, there are a ton of them on this chart. And right now, I'm looking at this chart, and I'm saying, I don't even need to draw the lines to identify where we could have gotten out with decent profits. So let's take a look. And here you have it. Let's run through them. So first one that jumps out at me is the lower high on RSI and a double top, in fact. You always want your indicators strengthening and confirming the price movement of the shares. Now, back when the stock corrected in 2014, the market sent you a signal by virtue of the fact that you had topping tails, wicks, shadows, whatever you want to call them, on top of these candlesticks. What did that imply? That there were sellers above. Also, the RSI was telling you that the stock was very, very overbought on a weekly basis and in all probability would give way fairly soon. Now, just because it was overbought on a weekly basis is no reason to go shorting the shares just yet. However, when you see topping tails like this, you may want to think about building a position, because shorts, when they see this, it's like blood in the water. They're ready to sell short, and they're going to begin building positions over the course of several weeks. And you can see that week after week, the topping tails became more pronounced until, in fact, shares, while they weren't really breaking down, had stopped going up. They went into a consolidation phase and then finally broke. Now, I missed one critical annotation that would have helped you as well. Be right back. Let me draw it. Okay, I said one, but there are actually two lines that I should have drawn to better illustrate this uptrend line. So note how a simple illustration tool on your charting software can make a world of difference in your ability to identify resistance levels and support levels. Note how each time we hit this upper band of the rising uptrend channel, we sold off. Note how every time we hit the lower band of support, we rallied. And then when we broke down below the lower band of support here, the stock is what we call broken. When it closed down below this support level, you had to get out, and you would have avoided this breakdown and nightmare. And this is another perfect example of how technical analysis helps forecast future financial price movements. Because when we bottomed out here, and in fact, this is another head and shoulders setup, but it's actually an inverted head and shoulders setup. It's an upside down head and shoulders. I'll point it out. Here's your left shoulder, head, right shoulder. Here's your neckline. The minute that we broke out above this resistance level, you could have bought FLDM because the breakdown was over. The trend had changed. You were putting in higher lows. That's bullish. Where you needed to get concerned about FLDM was right here, when you started flashing these topping tails at prior resistance levels. It did manage to break through, but as we neared the prior highs, you needed to get a little bit nervous. Being a little bit nervous is good. It's being cautious, because there's a phrase that I always like to use: the test is always at the top. Are we able to break out above the prior high of 49.46, or will we roll back over again and proceed down to retest prior support levels? And in this case here, we could not break out above 49.46. You draw your trend line down, and you can see that we put in a lower high as confirmed by the RSI and its double top. And note the huge, huge distribution on the part of financial institutions. This is not mom and pop selling 100 shares, folks. This is Goldman Sachs. It's Morgan Stanley. These are the big boys. These are hedge funds distributing shares, telling you they are voting on FLDM and where they think it's heading, and they are voting it's going lower. So I will be pointing out great support levels on FLDM where we can get involved with it on Sunday's Focus Stock Analysis video. I hope everybody got some value out of this video. If you're watching this on the home page, please subscribe to my free tutorials. Take advantage of the 14-day free trial offer. If you're watching this on StockTwitch or Twitter, please follow me there. If you watch this on YouTube, please give me a like and follow me. Everybody have a great, great weekend, and I will talk to you soon. Be well.